Hi, everybody. I'm Jeff Barton, and welcome to the Mortgage Minute. We're on, well, not as much as I'd like to lately, but I've been traveling. Went out to see my children in Portland and Seattle. It was a long, long drive from Los Angeles, and yes, I did. I did it in a camper van. It's for another show. Anyway, let's get right to it. Rates today. What are they? What we have here today is a 3.34 on a 30-year fix, 2.81 on a 15, 2.79 on FHA, 3.33 on the jumbo. That jumbo at 3.33 as average throughout the country has been that way for 2 months. The jumbo product is pretty stable. A lot of people are looking for it. Actually, a lot of lenders and a lot of mortgage bankers are trying to get into the jumbo space, probably why it's remained where it is. The 5/1 ARM is at 2.69 and the 10-year bond, the yield is at 1.659. All of these are improvements. Improvements from what I'm saying means that the cost of your loan went down because the rate went down, and the yield on the bond also went down, which consequently keeps the rates on mortgages down as well. Inventory down, housing 40% year over year. That's a bad thing. Home on Housing Wire, the home ownership gap talked a lot about what it is for white borrowers, white homeowners versus minority homeowners, and why that home ownership gap is widening. What can we do about it? A lot of what Biden is trying to bring in is a little bit more fairness in both lending and in housing policy in general. There's only so much you can do to improve that unless you completely target certain groups uh, over having preference over another. FHA tries to do this by allowing a certain amount of credit flexibility and also limiting the amount you have to put down. Uh, that doesn't necessarily only appeal or only help out those who are minority owners, but it is something, and they've been doing it for years. I'm not quite sure what the policy is. I've read a number of things on housing and how we can improve the amount of people in minorities and low income, especially. I guess it's more of an economic rather than a race issue for the report that I read. But what they said and what they're trying to get to is in the economic world, in order to get people who are low income, you have to either increase the number of homes on the market, i.e., get more people to sell, or you have to build more houses, i.e., get big builders to build more houses at a price that are affordable in areas where people live. All of these are market forces driven and part of the entire package of getting more home ownership to people who I guess financially can't afford it, and certainly that means poorer people, people who are mostly in minorities. Most of the service sector that have been affected by the COVID 19 epidemic have been minorities because these are the way to break into the U.S. market, especially if you have language skills, lack of skills, if you have entry level or low education levels. These are the kind of jobs you get into, and how do those people afford houses when we see housing prices just skyrocket? Uh, all of these are problems. We try to get to them on each and every week. Home ownership is my big push. I seem to think that that's the way to get people vested in keeping neighborhoods better, getting invested in your home, making it the best, keeping it the highest value, so that you'll be able to one day maybe take money out of your house. A lot of people do that, and that's a way by which you can also pass wealth on to your children. And these are all things that have been taken advantage of by borrowers and homeowners in the U.S. for generations, if not centuries. The CFPB extended foreclosures moratorium through the end of 2021. 3 million people have fallen behind on payments, so that's a really important thing. And on all these forbearances, we're looking at sometime within the near future, within the next year, that the forbearance period will end. What's going to happen when that happens, and what is happening to try to keep people in their homes even if they've lost their job, even if they cannot pay. There are some new guidelines out, a couple of CFPB recommendations in order to try to do that. One is, of course, um, the extension of the forbearance, and another one is to try to get these people into a refinance modification. The appraisal gap, who pays, right? So if you're in a home right now and you're looking to refinance or rather repurchase, you want to sell your home, price comes in 50,000 above asking because there's multiple offers, but the appraisal doesn't come in 50,000 above asking. It comes in at the asking price. Who pays the difference? Is it the seller? Is it the buyer? In a situation where you have buyers outnumbering sellers, obviously the buyer is going to pay, or else they can't get the house. Is that fair? And how do we rectify that? This is what we call the appraisal gap. Anyway, I'm Jeff Barton. That's a lot of news, some opinion. Really appreciate you listening. Again, we're on Facebook and LinkedIn quite a bit, and we're also on a radio show that airs six times a week, 5 different stations. We're on 9 podcasts. Yes, yada yada. Thanks very much, and we'll see you next time.